an honor to host everyone, give a platform to active voices, builders, engineers, creators within the space to come on and provide unique insights into the world of Web3 fashion as we see it today, and also differing perspectives on the future of it. So to start off day 5, and today it's a little bit shorter, we are having an encore from Bancor protocol, and we have their very own Mark Richardson joining us for an AMA session with all of our listeners. So Mark, thank you so much for joining us again, and welcome back.
Yeah, my pleasure. Thank you for having me again.
Great. So look, for this session, it's going to be really interactive. For everyone listening in, if you haven't joined the DIGITALAX Discord, join and post a question in the AMA chat. Don't forget also to post your wallet address, as we're giving out some really cool IRL Bangkor hoodies as part of the DIGITALAX drip line. So yeah, let's get started without further ado. So Mark, the very first question that we have today, Solana is asking, what are some exciting features to expect upon launch of Bancor v3 to make Bangkor stand out from the competition?
Yeah, certainly. So we haven't revealed all of the features of version 3 yet, but one of the features that we have revealed is that we are supporting sort of multi-level staking. And so what this means is that at the moment, users are kind of forced to choose between whether or not they want to provide liquidity with tokens on AMMs, or loan them out on lending protocols like Aave or Compound, or participate in their own project's staking mechanism. And so the Mono token is one example of this, where there is a intrinsic staking mechanism that is separate from providing liquidity with it, where users earn rewards for that staking action. And so with Bancor version 3, we're trying to eliminate that that opportunity cost of having to choose between which one of these to do. So with Bancor version 3, if you stake your tokens there, it will simultaneously be participating in active liquidity provision, which is extremely important to support the economics of the token itself. And it will also be used as for its intrinsic staking properties, if the project has a contract for that. So I think that that's probably the one of the most important features to be excited about if you are a Mono token holder. But this is also designed to be general. So this is going to be immediately relevant for things like Chainlink explicit staking when we find out exactly how that's going to operate. You can also use it to be an Ethereum validator if you are interested in staking Ethereum on things like Beacon Chain. There are really so many examples of this, and it's why we're taking it very seriously to make sure that it's that it is widely applicable across all kinds of token staking mechanisms on any number of blockchains.
Great. And so to clarify, that will be available for all tokens on this feature, will be available for all tokens on Bancor v3.
Yes, it's going to take a little while because each token has sort of its own nuances with regards to how the native staking works. But the way that Bancor version 3 is designed means that that any token will have this feature available to it with just a little bit of tinkering to make sure that the project's own contracts are being observed in the correct way.
Mm-hmm. Okay, and then the next question in our AMA. Uniswap are currently leading in the world of decentralized finance exchange. Do you think it's time Bancor knocks them off the perch or even shares the market growth instead of the unicorn getting fat and greedy?
It's an interesting observation. So the Uniswap v3, it calls itself very capital efficient. And that's certainly true from the trading perspective. But what's interesting is that even though it has the overwhelming majority of the volume, it has only a fraction of the profits. So even though Bancor has a very small volume compared to Uniswap v3, it's beginning to look like LPs are actually more profitable on our platform than on Uniswap v3. So Uniswap v3 really it expects stakers to sacrifice their tokens in order to support large volumes. On the hedge, that would mean that the protocol is intrinsically more profitable, and that has yet to be seen. Right? We are a part of a much grander DeFi research effort that is actually investigating whether or not the on-chain data supports the idea that Uniswap V3 is in fact the market leader. It's certainly very popular, right? It has the most users and it has the most volume, but whether or not it's actually achieving anything financially is open to question. So in the way that the question was phrased, I think we've kind of already knocked Uniswap off of the podium a little bit, because at least on Bancor as a liquidity provider, you're guaranteed to not lose any money, and currently no one else is offering that. And I think that the market is slowly warming up to this idea that all of the bright lights and hype that can surround different DeFi protocols often isn't justified when you have a look at the books. So yeah, I think that Uniswap will become more delineated from the rest of DeFi. It seems pretty clear to other people I speak to in the industry that Uniswap V3 was never developed for regular users, right? It's much closer to sort of the centralized order book models that we see in things like Coinbase, and is really, I think, going to drift further and further away from the rest of the DeFi community over time. And eventually we'll see, a very small number of users kind of commanding the overwhelming majority of the liquidity there. And unless you're a finance professional, I really don't think Uniswap V3 is for you. So, I quite like Uniswap V3. I think academically and technologically speaking, it's a marvel, right? It really is a really terrific product, but it's not designed for, I think, most of the people listening to this call. It's really designed for people that are already, quantitative analysts at hedge funds, or previously made markets on other exchanges. That's who Uniswap V3 is designed for. Bancor is designed for everyone else, and we think that that's a much larger market. And I think that we have currently the best chance of capturing it compared to any other protocol.
And I guess it's that thing as well. You mentioned, with Bancor, the impermanent loss protection. For a lot of people that are coming into this space, that's kind of, a new concept. And so as they learn more about, just how kind of significant that is when you are staking, and just the downside of that. It's also that education game as well of, how do you actually kind of expose more of these features to people so they know, okay, what does it actually mean, and why is there a bigger benefit on Bancor for that? So yeah, it's interesting, like you said, focusing on the retail side, which really is, it's a much broader scope when we think about the entire crypto community, and particularly the authenticity and the rooting in community, which, it's more about retail and not so much larger corporations or incumbents coming into the space. So the next question leading on from that, do you believe Bangkor can succeed the original all-time high over the next 6 months, which was previously achieved in January 2018?
Yeah, I'm not going to, I'm going to have to concede the floor to market speculators on this case. I don't like to speculate on the price of anything, but I do think that Bancor's TBL, right, which is the actual assets that we have staked on the platform, I think that is very likely to continue to increase with some of the things that version 3 is coming out with, and certainly as volume picks up, that the market confidence in our product is going to start increasing as well. If you have a look over the last week or so, you'll see that compared to other DeFi assets, Bancor has been surprisingly resilient, and this is something that our inner community members aren't surprised by, because the tremendous liquidity that BNT has paired against all of these different assets means that it's very difficult for market manipulators to move the price of BNT in any direction, right? And so that decentralized nature of the price discovery of the BNT token itself means that sometimes when the market is doing hyper volatile things, the BNT token kind of just gradually moves in with the rest of the market. So yeah, I think that the market overall is regaining strength, and because BNT tends to track with everything else, that it wouldn't surprise me if prices across the board continue to increase, that we should expect to see BNT increase with them.
Mm-hmm. And then next question. with the Bancor smart contract, is it designed to search the market and return the consumer the lowest possible price in the market?
Right. So that is called a market aggregator, and there are a couple of different options for this. It's not something that Bancor offers intrinsically, but it is something that Bancor is connected with. And so what do I mean by that? If you go to something like the 1inch protocol, what they do is they scrape prices from the current block height across any number of dexes, and that will allow users to generally get the best swap rates. Bancor doesn't do this by itself, because we see market aggregators as being the next layer above the DEX space. So yeah, protocols like 1inch, like Matcha, it's really their responsibility to make sure that that's happening. Although it turns out that there might be some room to develop a competitive DEX aggregator here. We have noticed that on some market aggregators, when they are claiming to give users the best price, there's no shortage of examples where they direct user traffic to suspicious private pools. So we are considering that we could add something like an aggregator function on top of Bancor, but it would have to be sufficiently different in terms of what it offers, that we're not just adding additional redundancy to projects that already exist. However, I will say that for a lot of the pools that Bancor has, it's already the deepest source of liquidity anywhere. So for things like some of the smaller cap tokens that we've introduced into the whitelist, for a very large number of those, all of the DEX aggregators are generally pushing user traffic through Bancor, and so you'll actually get a slightly better result if you just come to Bancor directly than if you have to go through a third party.
Great. And then next question. Is there a way to create an extra boost to Bancor through innovation in the NFT sector? I know Bancor is the pioneer of true DeFi, after IDEX was a thing, Bancor was true DeFi. So yeah, is this something that you guys are considering? I know that we kind of touched on it a little bit in the last core, but yeah, bridging into NFTs, or even providing kind of unique and novel solutions or products around this space.
Yeah, it's something that I've spent a little while thinking about. I'd say that our priorities are generally on fungible representations of value, but non-fungible representations of value are equally interesting. If it's something like a marketplace, right? I think that the auction system that things like OpenSea have are already pretty good, and it's pretty hard to do to discover the price of an NFT without an intrinsic or implicit auction. I have found that there are some other protocols that are doing similar things for NFTs that you can approximate to all have a similar value. So I would call these like a gumball machine. You know what I mean? Like when you put a coin into these machines at the supermarket or something and turn a little crank, that it dispenses something, and you kind of know what the value of the thing that you're going to get is, but you don't know specifically what type of thing that you're going to get, right? Maybe it might be a bouncing rubber ball of different colors or different patterns, or sometimes it's like costume jewelry or something like that. So these things inside the gumball machine, they are non-fungible, right? Because they're all different things, but they're all sort of similarly priced that you don't really mind which one you get. And so it is possible that we could set up things like a bonding curve for things like all of the floor NFTs for particular projects. Things like the CryptoPunks, the common ones, things like the anything where there's a very large amount of a token, where a very large number of them all share a similar value. We could potentially set up a bonding curve for something like that. But for NFTs generally, I'm not sure that is necessarily the solution that the DeFi community is looking for. And so there should be some other kind of price discovery mechanism for non-fungible tokens. And I have a couple of ideas for it, but I'm not ready to discuss those in a public forum just yet. They're a little half-baked. And we also don't want to give away any competitive secrets in the process. So stay tuned. It's something that we're considering. Obviously, NFTs have become an extremely important part of the ecosystem, and I think that they're going to continue to become more important. At the moment, NFTs are still sort of a highly speculative, asset class. But there will be versions of NFTs in the not too distant future that represent something much more, much more tangible. Things like, specific insurance contracts, maybe rental bonds. They could represent the deeds on houses, that kind of thing. And so the ability to find liquidity for this type of asset is very important. And I think the NFT system that we have already is a good one to experiment with, right? And so by the time these larger, more valuable versions of non-fungible assets from traditional finance begin to find their way into the DeFi ecosystem, that will be ready, right, to start hosting those.
Mm-hmm. No, interesting answer. Have you looked at all the fractional NFT kind of products where someone kind of puts an NFT into a pool and then it can be fractionalized to multiple owners, so ultimately you have like a fungible tokenized system on top of that? I mean, that's some of the solutions out there, but yeah, very interested to stay tuned with what you guys are cooking up behind the scenes. So next question, legacy DeFi is Bancor and others. Where do you see DeFi in the next 5 years from now? And I guess that is an interesting question, because kind of leading on from the NFT focus, and you mentioned some products that can intersect with NFTs, particularly in the financial and derivative space. Do you see that that's potentially where it's going to be very much more, now that when we look at crypto and Web3, we kind of classify it as, okay, you have DeFi, you have NFTs, you have kind of decentralized commercial products and protocols, that instead it'll be much more fluid, and we don't really classify it so much as we are today. And instead it's, more focused on what the product or protocol can do for you, not so much on what mechanisms are being used to get us there.
Yeah. So let's think about this. So 5 years from now, I think a lot is going to change. We know that, for example, regulators and policymakers are starting to take a very sharp interest in what we're doing, and so they should, right? We now have the enough value locked in DeFi protocols that if something went horrifically wrong, it would threaten, to bring about recessions in some countries. So yeah, I think that the relative anarchy of DeFi is probably going to have to relax, some of its values in that sense. And I don't think it's necessarily a bad thing. I think that there will be a greater regulatory presence, although I think it's going to be light touch, and that it's not going to be upsetting to many people. And I think that after those things start happening, we will see a lot more institutional involvement in decentralized finance, and certainly some of these more sophisticated products will start to become commonplace. Although I doubt that many retail DeFi community members will be particularly interested in them. So yeah, I think that it will start to look more and more sort of like the TradFi, sort of fintech products on blockchain. And I think that's good. But at the same time, I don't want to overstate my certainty here. If the last 2 years have taught us anything, it's that don't underestimate how fast things can move, right? I remember when people were getting really excited because, DeFi overall just passed, like $20 million and then $100 million. And then all of a sudden, it felt like in the blink of an eye, we're talking about hundreds of billions of dollars. And so if that trend continues, it's really difficult to say with any level of certainty what it's going to look like. But I do think it's going to become more commonplace. I wouldn't be surprised if the number of users continues to increase at a similar pace to what it has been, and that cryptocurrency and DeFi in general starts to be taken a little bit more seriously in sort of mainstream stuff. So I think we'll stop seeing Bitcoin being the butt of jokes in in sitcoms and that kind of thing. I think it'll start to feel more like it's arrived. But yeah, I'm not sure what it's going to look like. I'm also not, I think that's the better thing to do, right? Is to be reactive rather than prescriptive in how it develops.
Mm-hmm. And an interesting kind of question to add on to that. So you mentioned before Bancor having a focus on retail. What we're seeing with Uniswap as well recently, I mean, I think it was about maybe 2 months ago now, or 1.5 months ago, kind of, I guess, adding a bit more restrictions to their front end and their interface in terms of what tokens can be trading. I know Bancor, it's a bit of a different system because you have your DAO that actually whitelists the tokens and they go to snapshot voting and quorum. But what's your opinions on that? Because I guess that's kind of a little bit what you were touching on before around regulations. And as the space is maturing, I guess, policymakers, regulators, they become more interested. And like you said, it's not so easy to ignore. Even a year ago, things could have kind of been passed off as, well, this is a phase or it's a flash in the pan. But now, like you said, if something goes wrong or there's certain restrictions placed around products and services within DeFi, it really does affect people's lives. It's going to have an impact on the end user. So yeah, I mean, what is Bancor's perspective on this? Are you guys kind of very pro? Right, I know that's a very broad and encompassing question, but are you pro regulation, or you're more, like you said, okay, being reactive to it? Where I guess we don't know where things are going to go as well. We saw the infrastructure bill kind of reach a certain stage, but things are up in the air in terms of how this merges with TradFi, but still keeping very much Web3 principles.
I don't think anyone is, can say whether or not they're pro or anti-regulation. I think regulation is just a fact of life. But I would say that Bancor is pragmatic and it doesn't want to cause trouble for anyone. But it's worth pointing out, so if we have a look at what was happening with Uniswap, it's important to sort of look at it through the lens of what was happening in the United States, right? Because Uniswap is predominantly a DeFi product that's coming out of the United States, and all of its backers are VCs there essentially. And there was an infrastructure bill that had a lot to do with how cryptocurrency is being treated and how participants in DeFi should be classified and that sort of thing. And so the Uniswap protocol and its developers were probably receiving legal advice, from American lawyers that were trying to observe what was happening and probably getting them to err on the side of caution a little bit, so that everyone is protected no matter what happens with the outcome of that bill. So an important difference for Bancor is that we're not based in the United States, right? The Bancor Foundation, which isn't a venture capitalist group. It's a non-profit, but the Bancor Foundation is based out of Zug in Switzerland. So there's very different regulations that we have to adhere to. We're held to a completely different bar. We do like to make sure that everything that we are doing isn't excluding the American consumer base and user base. But yeah, at the same time, we don't have to panic as hard as I think some of these other protocols are. But yeah, I think that our philosophy will always be, we would rather not have to delist anything. We still think that the permissionless and censorship resistance of the protocol should be protected at all costs. And I think that that's fine. I honestly think that regulators eventually will concede that a lot of their definitions for things, are 60 to 70 years old, and we can easily update. I think it might be easier to change the law than to get people to than to rebuild DeFi to become observant of it. One of the examples that I've used recently is that when Uber first, launched its ride sharing service, right? This ability to summon strangers from the internet in cars and drive you to places. In Australia, it was immediately classified as an illegal taxi service. And I think a couple of the Uber drivers were fined like $45,000 for just for participating in that app. And of course, it was short-lived, right? Eventually, the Australian regulator had to revise that actually it doesn't really make sense. You know, Uber is functioning perfectly well, and we're not really protecting anyone from anything by outlawing it. And I have a feeling that DeFi will go through a similar growth process, a similar teething process, where yes, there will be lawmakers that have this knee-jerk reaction and want to hold certain people to account or make examples of some, but then eventually those charges will be dropped or forgiven as the conversation develops that actually, DeFi is much more a force for good than it is for bad, and it makes sense for both sides of the aisle to sort of converge on a policy that is, that's not forgetting, what value DeFi is providing for its users. I think that's what's going to happen.
Mm-hmm. Yeah, I mean, it's interesting to think about, because the traditional kind of policy regulation systems, they're very static. Something gets passed, it takes forever to get passed, and then to amend that, it's another, months, years down the track. So
yeah.
I guess it kind of does clash with the principles of Web3 in a sense of like having dynamism at the core, being able to pivot, react, and create systems that are more in the moment to what's going on. So I guess it kind of posed that question as well. Well, in order for other parts of Web3 to mature, do we also need to bring on the legal and regulation and policy system into Web3 as well? I mean, it's interesting to see how that will play out. But
I think it's also worth acknowledging that a lot of these laws were put into place during a very, very different period in the world, right? So like the way the legal process works is kind of, like bricks in a wall. Precedent defines new precedent and kind of gets built up over time. And so from the 70s and 80s, we really sort of accidentally set up this foundation where the global financial world was kind of becoming more and more reserved for an elite group of people. And maybe that wasn't going to be so bad, right? Maybe lawmakers at the time, in the 90s, there was going to be some reform to some of these things. But when people were looking at it, they were like, actually, maybe it's a good thing that only, people that are chartered accountants or, have these specific qualifications can actually have the agency to do things on this scale. And that way we can trust that the decisions that they make are going to be good for the world overall. And of course, it didn't take very long for us to realize that that was hopelessly naive, because, in my lifetime, these elite individuals with whom we trust global finance have bankrupted the whole world almost 3 times now. And so maybe it's time that regulators go, well, actually, these laws are causing a lot of problems. And maybe it is time to decentralize it, because we can no longer trust that the old guard really does have the best interests of the world at heart. So yeah, we will see. I think that the philosophy of Web3 is, there's a reason why DeFi is such a good fit for blockchain. And, I hope and I do believe that most regulators will see the value in it.
Mm. I guess, the ultimate question is cui bono, who benefits? That's really what it comes down to in the end a lot of the time. But it's a shift, right? And we are seeing it. Like you said, 1 year ago, it was like having a couple of billion locked within a DeFi protocol was considered crazy. And now it's completely the norm. No one bats an eyelid. Okay, next question. What is the difference between BNT and VBNT?
Yeah, that's a really good question. So BNT is not a governance token, right? And so this is kind of another one of the things that separates the Bancor protocol from a lot of the other DEXs, is that the tokens that they have are governance tokens in and of themselves. But the BNT token it can't be used for voting. It's a thing that powers the network, right? You actually need to put it into the network in order for the protocol to do things. So it's a little bit more like Ethereum on the beacon chain in that regard. VBNT is generated when you provide BNT to the protocol. So the governance token is kind of like a receipt of the deposit of BNT to the system, and that gives you voting rights. And this means that by and large, everyone who has VBNT and is participating in governance has a stake in the Bancor protocol. They are actively providing liquidity to it, and that means that they have an incentive to make sure that governance performs its job well, because they have their own money at stake if it fails. This is in stark contrast to something like the Uniswap token, and I'm not bashing Uniswap here. As I've said before, I think Uniswap and as a project overall is terrific, and even its V3, while I think imperfect, is still very good. But the Uniswap token itself, I don't think is very well designed, because most of the people that own it don't have any liquidity in the pools. And so it's worth asking whether the decisions that are being made on Uniswap's governance are really in the best interests of the liquidity providers that have all of their money staked in the protocol. And this would help to explain why things like the DeFi education fund fiasco was a thing, and why a lot of people that push some of the Uniswap policy through and up to a vote seem to deliberately keep it out of the view of the Uniswap community until the very last minute. And so there is this misalignment, I think, of incentives. And so with VBNT, it's a similar mechanism. So VBNT just is a governance token. That's all it's for. But in order to get it, you have to provide liquidity to the system. And when you're removing liquidity from the system, you have to concede your voting rights. So it basically just means that the way that the Bangkor DAO operates, you can be certain that the decisions are being made by people that actually have something to lose, which is an important distinction. But yeah, they're different tokens. VBNT is the receipt of deposit and your voting token, and you have to give it back when you want to withdraw.
Mm-hmm. Then the next question, someone's asking, when is Bancor V3?
We haven't officially announced when it's going to be. I'm hoping that on our community call on Sunday that we'll be able to provide the community with at least a vague idea of what we're expecting. But I can't, I'll get in a lot of trouble if I say more than that.
Sure. Okay, another interesting question. Do you have plans to create a Bancor rabbit hole quest in the future? So for those that are listening and don't know what rabbit hole is, it's rabbit hole GG. It's like a protocol that is incentivizing users to actually be able to educate themselves on different products, DeFi products within Web3 and within crypto. And there's kind of a whole bunch of quests that you can do to learn how to say like stake in Aave or lend and borrow in Aave, for example, and then actually receive tokens from that. So yeah, is there any plans for Bancor to integrate within that? Yeah,
there are plans. The rabbit hole is one of the options. We've also spoken with it's like a earn and learn or learn and earn program that's operated by some of the major centralized exchanges. All of these options are attractive. We're just trying to work out which one has the highest ROI, right? So there's a specific user type that's associated with rabbit hole, then we may if that user actually wants to reach out to me and try and sell me on why rabbit hole is the best option for that, I would gladly hear it. It's a good time to do so as well, because like I said, yeah, we are planning it, we're considering these options, and so if there is a very easily articulated reason for why rabbit hole is the right decision, I would really like to hear
it. Next question. Okay, this is the same. Someone's asking the same question I've had a few times. Are you looking to branch out onto other cheaper networks? Unfortunately, ETH gas is difficult for a small fish like myself.
Yeah, it's a complaint that we get a lot. Unfortunately, Ethereum is a rich person's blockchain still. It has certain advantages though. So for example, there's hardly any spam transactions on Ethereum because the gas cost is so high. And that means that there is an intrinsic confidence that we have that transactions are going to get processed in a relatively short time window with a relatively high probability. At the moment, things like Polygon, because the gas is so inexpensive, are now starting to suffer from a lot of spam. So I think just recently the transaction failure rate was as high as 80% when the network was getting really congested. And these is some of the things that we're paying attention to, and this is likely going to be something that all of the cheap blockchains struggle with until there's like a blockchain version of Spam Assassin or something like that prevents malicious or time wasting DDoS type attacks from occurring. Having said all of that, our community is extremely interested in getting on other networks. Bancor has always been a multi-chain protocol. I think we were the first DEX, maybe the first DeFi product to exist on 2 different blockchains at once. And so back when EOS first launched, we developed a product called Bancor X, which allows BNT to be represented on 2 blockchains simultaneously. And it would be naive to think that we wouldn't be leaning into that technology again when we start rolling out on different layer 1s like Avalanche, and the layer 2s for Ethereum like Optimism, Arbitrum, and Polygon. So yes, absolutely, it would be insane if we didn't start appearing on some of these cheaper blockchains. It's just not entirely clear which ones are going to have the sort of staying power that we're looking for, and the stability and security that would justify a multi-billion-dollar protocol being there. All of that said, I think that Polygon has been around for long enough now that almost everyone is confident that it's going to be here to stay. And it also had a really good run, right, with a bunch of different DeFi protocols up there. Arbe's on there and has a huge TVL. So I would be very surprised if Polygon wasn't among the first layer 2 solutions that Bangkor deployed its protocol on.
No, I mean, DigitalAX, we moved to Polygon, one of the first projects on there around February, but definitely from like an efficiency level and sustainability in terms of just being able to pass transactions through the network or mint NFTs. And not have to pay huge gas, it does make a difference. And another question I'll ask on that. So besides efficiency of gas fees, what else informs Bankor's decision of, say, branching out to another blockchain, another layer 1, another layer 2? You mentioned, Ethereum really being a cornerstone. I mean, something that I really love about Ethereum, it's the authenticity to decentralization. And the developer activity, the productive capacity that we see amongst protocols, amongst the ecosystem. Is this something else that informs your decision? Like we have chains like Binance Smart Chain, which very much more centralized. It's not really about promoting Web3 at its core. It's more about just providing a product on top of the Binance ecosystem. So yeah, I mean, how do you take decision? Is this something that influences it, or you're looking more at purely like user experience?
Yeah, it does influence it, and it's important to remember that I can't speak on the community's behalf. If the community wants Bangkor to be on a certain blockchain, it should be as simple as them creating a well thought out proposal for it, and then creating a vote. And if it passes, the foundation would approve a grant, possibly for someone to move it to that blockchain, or it would fall onto the current grant holders, such as myself. But I think that how the community and how the leaders in Bangkor kind of think about which blockchains that we want to be on. At the very top is security concerns. When a blockchain is brand new, it's guaranteed that it's going to have bugs. And if you are the first DeFi protocol up there, the TVL that you bring with you becomes kind of a bug bounty, right? For an attacker or an opportunist to try and figure out what the bugs of that blockchain are. And so really there's no line in the sand where you can just kind of say, okay, it's been X amount of days, we're guaranteed now that there isn't going to be some awful exploit or something like that. But generally, the longer that a blockchain has been around without something critical being discovered, the more confidence that you have that you can go there without too much risk associated with it. So yeah, in generally, we don't like to be the first through the door onto a brand new blockchain. We would rather some other people test the water before we get there. Which is fine. I also don't think that there's a huge amount of advantage to being first on some of these blockchains, and so we're happy to be patient. Another one is economic security, which is something that you don't hear spoken about very much, but is very important. So for Ethereum, one of its biggest features is how diverse the sources of capital are. There isn't like a single investor, a single VC firm or something that controls all of the wealth there. Whereas for a lot of these new blockchains, sometimes almost 100% of the wealth comes from a single source. And that means that if you have a DeFi protocol up there, or on one of these other layer 1 solutions, that it would be very easy for someone to create an economic exploit in order to extract value from a protocol. And so that's the other thing that we need to pay attention to, is that is the actual finance sufficiently decentralized that that someone couldn't perform a virtual price manipulation, for example, on one of that chain's intrinsic one of its native tokens in order to perform like a rug pull exploit or something like that. And this is exactly the kind of behavior that we saw in BSC. And so we knew, right? We had one of our advisors tell us that Binance Smart Chain is going to be a hit, and there's going to be a lot of users, and it's going to be this cheap, and it doesn't have all these problems that Ethereum has. And if you go there, you'll probably get this number of users. We still didn't do it, partially because we could see that there was this, this ominous threat of kind of rug pull scams being that frequent. And so if we went there, it's like, what would you even want to whitelist, right? And what projects do you trust on BSC? And the answer, there were still good projects there, of course. It's not like everything on BSC is terrible, but the frequency of the bad ones is just too high. And so having a protocol there that whitelists things against, impermanent loss, it just was impractical. And so I think it's time to let BSC sort of settle down and mature a little bit, and then we'll be ready to go there with our protocol. So it's these sort of things that we think about. It's not enough that a blockchain is fast and that it has lots of users. It also needs to be highly secure, both at the software level and also highly secure at the economic level. So it's a lot more complicated, I think, than a lot of users give it credit for. And in general, the best answer is just time, right? You'll kind of know a mature blockchain when you see one.
Yep. Okay. Next question. Could we see Bangkor eventually be an incubator for DeFi startups in the near future? This is kind of interesting. Yeah.
Absolutely, yes. I would say that it's even, this is one of the things that Bancor set out to do in the first place, right? One of the reasons why I think our community loved the Mono token so much, and other similar projects, things like Zero Chain, like MPH, is that when Bancor invented the AMM, it was to make sure that these token projects, these startups, have a way to create liquidity for their token. I absolutely think that we also have a huge amount of supportive and highly skilled community members that can provide helpful advice for new projects and things. And the whitelisting process for Bangkor, it also means that some token projects are forced, maybe for the first time, to have a really critical look at what their token distribution is, whether or not their contract is standard ERC20, or if there are any potential problems there. Maybe it's time to concede some of the administrative rights or emergency powers, that sort of thing. So yeah, the process of becoming whitelisted on Bangkor means that you get this kind of community auditing. Generally, you end up on the phone with someone like me, or Nate, or CTO, or the devs. The community calls that we have also mean that you kind of get the message out a little bit more. You find a new user base and that sort of thing. But yeah, at the end of the day, we are looking for new ways to find immediate liquidity for brand new projects. The whitelisting process, while good, it's imperfect because it's a little slow. We also, the community doesn't like to have token launches that are whitelisted because before you've discovered a price, the impermanent loss can be catastrophic in both directions. And so we do need sort of a launch pad that would allow for tokens to be released on Bancor from day one, right, and discover their price that way. And that's something that's been in research for at least a year. You would have heard Nate and myself talk about, originally it was called Launchpad, and I think we called it Origin Pools, and it'll have some other name. But basically, we want to have a feature where brand new tokens, right, can have a liquidity pool on Bancor, and where the community members and token teams that set them up can have some kind of impermanent loss protection associated with that token launch. And that should be expected to be one of the key V3 features, although I can tell you it won't be ready on day one, but it'll be a very close follow-up. So yes, we are going to build out these types of incubator type features, and I'm really excited to continue looking to continue working with other projects on on their liquidity needs.
Great. Okay, next question. If I join the Bancor LP provision sector, can I view and modify my Bancor LP positions on Zorion? I love Zapper, but Zorion is so much more comfortable for me. Are there community events I can participate in? It would be amazing to assign LP positions to my favorite NFTs. This is like digital identity to me.
Right. Yeah. This is really interesting feedback. It's not the first time that a user has asked for these types of things. I'm not entirely clear on the Zorion integration. But yeah, look, that's all really terrific feedback. If you are, you don't even need to be a Bangkok community member, even if you don't have any BNT. If these kinds of things are important to you, you don't. We welcome outsider participation in governance at the proposal level. So if you think that there's a catalog of things that you would like to be able to do as a liquidity provider on Bancor, whether it's the Zorion integration or the ability to create NFTs out of LP positions or whatever, what I propose is that you go to the discourse section of our governance page, so gov.bancor.network. And there's a channel in there called the community discussion room. And you can, anyone, regardless of whether or not they hold BNT, can create a thread there and sort of detail the things that are important to them. And that is the genesis of all of the proposals that end up on Snapshot for a decision. And so if that garners some traction, what you will find is that there are dozens of people in the community that will help you to organize those points into a formal proposal, and then connect with different teams or around the ecosystem and help to turn that thing into a reality. So yeah, if those things are important to you, please consider joining our discourse channel and our Discord, and yeah, essentially just raising awareness for those issues.
Great. Okay, next question. Find a good one. Someone's asking, are you planning on, I mean, you kind of touched on it before, but are you planning on launching on Avex?
On Avalanche? Yeah, possibly. Avalanche is, it's kind of being hyped up right now. The bridge seems to be working okay. There are a couple of DeFi protocols over there right now. I still think it is too early. Like we wouldn't want to launch on Avalanche today. But just like with the layer 2 solutions on Ethereum, there will become a time where we say, yes, we now trust the solution and it doesn't have any apparent exploits. There was, Avalanche does concern me a little bit because they had it is a new chain, and they had a double spending exploit not too long ago, right? It was, I think might have been 6 months ago. They called it bonus blocks or something to kind of write it off. But it does suggest that there might be some that the consensus mechanism might need some work. But like I said before, if enough time passes and we don't see another double spending exploit, then it suggests that that blockchain is secure, and we would be more than happy to go there. But yeah, it's not. It doesn't take priority necessarily. I think that it's as attractive as any other blockchain right now. And yeah, if it begins to demonstrate that it has some staying power and it gets a lot of users, and there aren't any profound security problems, then absolutely we'll go there.
Okay, another interesting question, and I guess it kind of brings in more of the governance side of Bancor and how you guys operate as a DAO. Someone's asking, how will laws be implemented in DAOs? And I guess it's more an opinion question, but how do you think laws will be implemented in DAOs in the future? And how you manage the cultural differences of people in making decisions in particular? I mean, I'm sure that you kind of probably experienced some of this already. You're bringing together a community from all over the globe with different backgrounds. Like, how do you guys navigate that at the moment? Is there challenges that you face, or what's been the experience so far?
Yeah, absolutely. Cryptocurrency is nothing if not extremely tribal, and at times even cannibalistic and aggressive. The best example that I can provide for where we've had this big sort of culture clash is that the Bangkok community is very thoroughly entwined with the Chainlink community. And what that means is, good luck if you're an Oracle project that's trying to get your token whitelisted on Bancor, because the Chainlink community hate them, right? They want a total monopoly on all Oracle technology. And so, banned API 3, every time a whitelisting proposal begins to surface for these things, the Chainlink community gets very organized to make sure that these things get voted out. And I'm hoping that this is a temporary issue. I think as a DEX, right, for Bangkor, it really doesn't matter, right? If these, even if Chainlink is obviously the superior Oracle solution for now and for the foreseeable future, that doesn't mean that we can't have liquidity for other Oracle projects. So that is definitely one where decisions of the heart are kind of trumping decisions of the head. And that's okay. I think every democracy struggles with this. And DAOs are certainly no exception. I think that the best that we can do to manage it is to, always keep talking, right? To make sure that community members talk to each other, and that we, do our best to sort of keep those discussions as pleasant and data-based and well-informed as possible. But humans are humans. At the end of the day, people have got people are going to have different ideas for all kinds of reasons, and people get upset for all sorts of reasons. I think my role in these types of things is just to make sure that people aren't being deliberately upsetting. And so on our community channels, if you are doing something that is could be categorized as trolling or as deeply offensive, you will get booted, right? We do make sure that that the content is quite well moderated. But if you have a proposal that just offends people because it goes against their personal beliefs about cryptocurrency or something like that, then I think that we should expect the full spectrum of human emotion, and that doesn't necessarily need to be moderated. And I think that every problem eventually has a solution, so long as people keep talking about it for long enough. And so I think, it's a problem that every democracy will always have, and we'll manage it, kind of on the go. I don't think that there is a single policy or strategy that's going to work for every case. We just have to manage it as we go. But it's a very thoughtful question.
Mm-hmm. No, it's interesting, the tribal mechanics, but have you thought of different incentive structures even that you could put in place to kind of circumnavigate some of this? I mean, I know it's very difficult, right? But have you guys thought of any of that side of things?
Yeah, so one of the things that's been working really well, and certainly the Mono token falls under this category, is that to get people to engage with a policy, especially a whitelisting policy, is that if you offer the Bangkor community something like, you know, a collectible NFT or some other sort of inexpensive, you know, incentive just to read the proposal and voice their decision, right? Whether or not it's for or against. This generally has been extremely successful because it kind of helps to battle that apathy, right? Or that, you could even call it boredom, right? Bancor has to do so many proposals all the time. And to keep community members constantly engaged, it is challenging. And so there are a couple of things that are being done to try and combat this. One is that we manage the bar by which a successful proposal is judged. So in the beginning, when the Bangkor DAO was still quite small, we had a very, very high quorum percentage. I think it was 40%, and that has since been dropped to 35% in the majority of situations. We let external token teams incentivize people to vote through offering things like NFTs or their own token or whatever that is. And then we're also using things like vote delegation systems that will mean for people that are sort of checking out of governance a little bit, can elect someone else to vote on their behalf. And this is, you'll see this on the discourse page as well. There are self-nominated community members that manage a description of what their voting strategy is, and are happy to shoulder the responsibility of continuing to vote. But in terms of just paying people to govern stuff, it's likely that we will never do that. And there's a couple of reasons for it. One is that it could be very easy to make an argument that turns BNT into a security. And then the other reason is that personally, I think that the game theory doesn't work out very well. If you're just paying people to vote for things, then they're incentivized to make a decision no matter what. Whereas if you are introducing an incentive system such as, you know, external teams providing whatever their thing is, then the decision that you're making is based entirely on what you think is good for the protocol, right? And if you're paying someone just in BNT, then it's easy to set up like a bot or something that just does that, and it just becomes sort of an exploitative yield farming opportunity, and we want to avoid that.
Mm-hmm. No, I guess the bigger thing there as well, like you mentioned, with BNT and VBNT, it's also, you know, the fear of loss. I mean, that's what drives more people, like it drives people more than gain. And so having skin in the game, they're staking, and then, yeah, I guess it's, you know, more of that seriousness that, well, what am I whitelisting and what am I actually voting and proposing on, then it can actually affect my position in a pool or within the protocol. So yeah, that's another really important point. Okay, so one more question. Let me find a good one. Okay, this is a kind of a pretty good one to round out. Besides the impressive deep level wisdom you know about Bangkor, what is the best resource to use for the non-DeFi heads looking to get on board?
Yeah, that's a really good question. So Bancor has a blog series on Medium, and I think that's a really good place to go to. That has a full history in it. Everything from the original community currencies that Bancor was inventing to solve national currency problems in different places in the world. Everything through to the invention of the AMM and beyond. It has all been sort of compiled into these really beautiful documents by Nate Hinman, and it's a really great place to catch up on everything. For more sophisticated users, or maybe after you finish reading the recent blog entries and you want to go a little bit further, I still think that our discourse webpage is a really good place to sort of learn about what the current affairs, I think, are like, not just inside Bangkor, but inside DeFi in general. And then after that, reaching out to people like myself or other community members that are, that have put up their hand to say that they are interested in communicating with outsiders and showing them the ropes, so to speak. I think is a really good way to get started. But I do think that there is a need to have sort of a repository of DeFi, DeFi and or Bancor information in sort of one place. And so, we occasionally talk to content creators to create sort of educational videos on various aspects of, I think, the DeFi, the Bancor protocol itself. But for DeFi generally, I strongly recommend YouTube channels like Finematics, who covers really excellent, the content that he curates to make videos for is extremely good. And the videos themselves have a huge amount of explanatory quality to them. And so I think that's I think I'm going to limit my answer to there. I will caution users though, if you are new to DeFi, that YouTube can be a very bad place to get information from. There are a large number of YouTube channels that receive paid incentives from token teams who create essentially material for these YouTubers to present, and that's fine. That's like that's their business model, and so I don't sort of I have no animosity towards the YouTube channels that do this. But I do think it can be a very bad way to learn about DeFi if you are naive about about how that works. So definitely find the stuff that's education focused. The things that is explaining a certain concept is going to be much better. Basically, anything that brings your attention to a price chart or something like that is probably not going to be very trustworthy.
Great. Then look, Mark, we'll stop the AMA there. I know you're in Australia, so you're a bit of a trooper. It's 1 a.m. I think for you right now, if I'm correct.
Yes, it is.
So yeah, we'll let you get to sleep. But thank you so much for joining us. The presentation earlier in the week was great as well. So if anyone missed that, we'll be putting that on YouTube as well as this AMA. But yeah, thank you so much, and looking forward to probably doing another one in the near future.
My pleasure. Thank you for having me.
Thanks, man. Bye. Okay, everyone. So kind of